You guys, good morning. Yeah, it's already morning. Good morning. So I was quickly explain this chart and my places I'm looking for potential sales. So let's go back to the daily time frame. So in daily time frame, you can see that markets give build up here, it gave inducement, build up here, inducement, then this supply zone. So after the supply zone now, markets give market structure shift around here, mitigated at that high, came downward, give break of structure. So which means we're expecting highs and breaking those. So we're bearish at the moment. So here after this break of structure now, I'm seeing mitigations, and my possible mitigation point is supposed to be here. We got build up, right? We got build up here. We got inducement. So I'm not looking for mitigation around that side. I'm looking for mitigation around this side, because this is the major build up here. Market gives a very huge build up here, right? Market give a very huge build up here, then inducement. So I'm expecting market to come to this our point like this, maybe reject before tapping it, then tap it and come downward. Because this point, let me refine the point for you so you understand why the point is here. So you can see this RBS around here, right? So that's our entry point, and as you can see, there is other blocks here and supply zones around here. But the reason why I'm actually using that one is because of market have mitigated this breakup block around here with this side here, with this one here, and it have already mitigated this one too with all this one here. So this one now is the one aligning here with our breakup block around here. So I'm using that point now as my entry point. So that's where I'm going to actually be entering. That if market come back there, we'll maybe look for confirmation that if it's closer to our time windows, and if it's not closer to our time windows, then I'm going to do aggressive entry, aiming for 1:6 risk to reward. So that's how I'm actually going to view the market, and let's see if market give me that outcome. And secondly, I want to actually talk about something. Most times I see people talking about taking losses, taking losses, and I can actually tell you that my strategy actually has very low win rate but high risk reward, and I'm profitable. Let me explain it for you. My strategy has around 46% win rate on overall, and this week I was around 38 point something percent win rate. But I aim for 1:6 risk reward. So if you make the calculation, let's say for example you have a 10k account and you are risking, example, I'm not saying I have a 10k account, though I don't, I have many accounts, but let's say example you have a 10k account and you're risking 0.5% per account, and let's say you take 10 trades actually and lose 6 and maybe win 4. If you are aiming for, let's say, 1:5 fixed reward, no must, it must be 1:6, because everyone are not my student and everyone does not have my trading style. I'm sorry I said my students, but everyone are not like me and everyone has their trading style actually. So let's say for example you risked $50 for $250, and maybe you win 4 trades. 4 trades is going to be around $1,000, and you lose 6 trades. So 6 trades you're going to be losing around, I think, $300, because 550 times 6 is going to be around $300. So you lose around $300. So your net profit is around $700 for that whole month, or maybe that whole week if you took, I think, 10 trades, any amount of trades you take. So that's going to be how your risk reward is going to be helping you on a low win rate. Let me explain another one again. Like my win rate when I actually came to this, like my win rate when I actually this week though. Let me explain. Let's say I have 33% win rate, meaning if I take around 10 trades, I lose around 4, and I lose around 6 rather. I lose around 6 and I hit break even on 1. So meaning I lose 6 trades and take break even on 1. So let's say for example now you are risking 0.5%, like I told you, on your 10k account. The reason why I'm actually saying 0.5% is because you have to protect your capital first. When you protect your capital first, the profit is going to come again, like it's going to come follow the protection of capital. So let's say for example I risked around $50. 1 is to 6, $50, 1 is to 6 is $300. For 3 trades, that's $900, right? So with $900 and I take around 7 losses, let's say 6 losses, and then one break even. So I take around 6 losses. The 6 losses is going to be around $300 because I'm going to lose $300. And then the one break even is going to be I not won anything and I not lose anything. So which actually means I am still in the net profit of $600. Mind you, my last week profit wasn't $600, it was $103. So I'm just making that explanation, like I'm just explaining it for you on using that way. You understand? So that's actually how win rates can actually help you. Don't think of being having low win rates is not gonna make you profitable. You will be very very profitable when you have a very good risk to reward and a working edge, like a consistent edge that you actually follow often and often. So stick to the rules. When you stick to the rules, risk under rules, like stick to your criteria. Risk when the criteria are met. Set limits on when your criteria are met, and inshallah, just journal the outcome. If you would like to use the profile I use, you can click on the link below. And if you would like to use my trading journal software that I actually created myself, the link is also below. Don't forget to subscribe to my channel and turn on notifications so you'll be notified when I post a new video like this. Thanks very much for watching. I really appreciate it.